Welcome back to Investing Talk Podcast.
Today, we're looking at Red Cat Holdings, RC. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For listeners maybe not so familiar with RCAT, the real insight here is that you aren't investing in just, a generic tech company.
Right.
You're really placing a strategic bet on the future of U.S. defense procurement. RCAT is, it's basically like an ETF for tactical drone geopolitical risk.
An ETF for drone risk. I like that. And the recent news flow, it's been pretty electric, hasn't it?
Absolutely. That momentum has been building significantly over the last 3 months, really putting them on the radar for serious institutional players.
And the peak really hit in October, with what you call the proof of concept moment.
Exactly. Their FANG FPV drone achieved Blue UAS cleared list certification. That was the big one.
Okay, so why does the market treat that certification like winning the lottery? What's the big deal?
Because that clearance is absolutely non-negotiable for U.S. defense procurement. It's basically a stamp of trust from the Department of Defense.
Okay.
It immediately opens the door to billions, potentially, in government contracts, which is exactly where RCAT wants to play.
So it's market access, pure and simple, massive validation.
Huge validation. But the win that tells us maybe even more about their proprietary advantage.
Yeah.
That was the successful GPS-denied drone flight tests, also in October.
Yeah, I saw that. Caused an immediate, 8.3% pre-market surge?
Yeah, and that market reaction is critical. It tells you something.
So why does the market react so violently to that specific tech? Why is flying without GPS such a game changer?
Well, think about it from a military perspective. Contested environments.
Okay.
In any, near-peer conflict scenario, the first thing adversaries can try and do is deny or jam GPS signals.
Makes sense. Knock out the eyes and ears.
Exactly. So if your unmanned system, your drone, can't operate autonomously without that satellite link, it's essentially useless in a real fight.
So this capability, it's not a nice to have, it's fundamental.
It's absolutely fundamental. It's the difference between having a defense contract for critical gear and just being another startup selling, hobby drones. It shows resilience, the kind defense agencies desperately need.
And that technical win, it validates the heavy lifting they've been doing. We saw hints of this earlier.
We did. We actually saw the strategy unfolding earlier.
Right.
If you look back to August, their Q2 earnings confirmed they were laser focused on this pivot.
How so?
They reported significantly increased R&D spending and a very clear, pretty aggressive move toward a government sales strategy. It was all laid out.
Yes, and supporting that internal shift, we saw the external market kind of positioning itself, didn't we?
We did. There was increased institutional investor engagement, some modest share price support from ETF activity back in Q3.
So it signaled that the smart money was anticipating these exact wins, the certification, the contract potential.
Pretty much. It wasn't a huge shock to those paying close attention when the news finally dropped. They were getting ready for it.
Okay, so the tech is hitting home runs, the strategy is clear. But, home runs cost a lot of money.
They do.
Let's talk about the ugly side of this, the financials. This is where the bullish bet meets maybe a massive reality check. Where's the contradiction?
Yeah, the contradiction is pretty stark because the company is investing heavily for massive future growth. But the present financials, they reflect that cost in a very painful way.
How painful.
Revenue for fiscal year 2024 was only $7.28 million. Which, importantly, is down almost 60% year over year, 59.2% to be exact.
60% drop in revenue. Wow. And the bottom line?
The net loss was substantial, negative $65.4 million, which reflects those high R&D costs we mentioned. And they're also burning cash aggressively. They posted a negative free cash flow of about $13.2 million.
Wait, hang on. Negative $65 million in losses on just over $7 million in revenue? That ratio sounds terrifying.
It does look scary on the surface.
Is this just a classic story? Defense startup burning through cash, hoping for the big contract? Or is there hard evidence that money spent is actually yielding results soon?
That's the million-dollar question, isn't it? Or maybe the $172 million question here. And here's their critical safety net. The balance sheet is surprisingly robust.
Really? How so?
It mitigates that burn rate risk quite a bit. They reported cash reserves of $65.9 million, and they maintain low net debt.
Okay, so nearly $66 million in cash. That helps.
It definitely helps. But
Yeah.
crucially, they secured a massive $172.5 million equity capital raise in Q3 2025, just recently.
172 million, that's huge.
It is. And that capital raise isn't just cash. It's a massive multi-year runway for them.
So it signals market confidence, despite the losses.
Exactly. It signals the market believes these high R&D costs are strategic expenses, not, existential threats. That money is the crucial buffer. It's secured funding for their growth initiatives for the foreseeable future.
Okay, that context is vital. That's the ultimate vote of confidence from the market, isn't it? Pouring that much capital in.
It really is.
And it probably explains why analysts seem, well, completely unbothered by the current losses and are projecting pretty rapid growth. What's the consensus outlook right now?
It's a resounding strong buy consensus, which, as you noted, is actually quite rare for a company at this stage with these kinds of losses.
Tells you something.
It tells you everything about the belief in their technological pivot toward defense. Price targets right now range from about $13 to $15.
Okay, $13 to $15. And the stock's been around, what, $10.50 lately?
Yeah, $10.56 as of October 30th. So that suggests analysts see a potential 30% to 50% upside baked into their models.
Just based on contract anticipation.
Largely, yes, based on the belief those contracts are coming.
Which brings us right back to the technology moat. Why are these price targets so aggressive? What exactly makes RCAT's specialized drone systems hard to copy? And what are they actually designed for?
Well, their specialization is key. They aren't trying to be everything to everyone. They focus squarely on ruggedized defense and government unmanned systems.
Like the FNN drone we mentioned.
Right, the FNE, but also the AROC NID and Black Widow lines. These aren't just cool names. These are purpose-built military systems designed for specific tactical roles.
And the moat. What stops a competitor just building something similar?
The moat really lies in two main areas. First, that proprietary tech for GPS-denied flight we keep coming back to.
Which we established is essential.
Essential for survival in contested airspace, exactly. And second, the advanced AI integration they're achieving through partnerships, like the one they have with SafePro.
AI integration, how does that help?
It allows for superior autonomous decision-making in the field. The drone can react, adapt, complete missions, even with limited human input or jammed comms.
So it's not just a vehicle, it's a smart, resilient system. It can think for itself, essentially, when things go wrong.
Pretty much. That resilience and autonomy combined are the unique selling points.
And hard to replicate.
Very difficult and expensive for competitors to replicate quickly. And their credibility is also getting boosted by recent alliances, like that $800,000 contract they secured with Unusual Machines.
Ah, okay. So other companies are already buying into their unique defense capabilities even before the really big contracts land.
Exactly. It shows the market is starting to recognize that value proposition.
Okay, let's look forward then. What are the hard-scheduled upcoming catalysts? The things that could really move this stock over the next, say, 3 months? We need dates to watch.
Okay, we have several key dates coming up. First, and probably most important near term, is the Q3 earnings release. That's scheduled for November 14th, 2025.
November 14th. And why is that one so vital, beyond the usual numbers?
Because this report is where we need to see visibility. How are those recent wins, the Blue UAS clearance, the successful tests, translating into actual contract progress, procurement momentum?
So we're looking for guidance, forward-looking statements, not just the past quarter's financials.
Absolutely. The market will be dissecting the commentary on the pipeline and potential orders.
Got it. And then looking into December and early next year.
Around December 20th, 2025, we hit a potential ETF rebalancing window. Now, this is more technical, but if RCAT's volume and momentum stay high,
They might get added to indexes?
could be, or have their weighting increased. That could drive incremental passive fund flows, just automatically buying shares, giving the stock a bit of a technical bump.
Interesting. And after the new year?
January 6, 2026, that's confirmation day potentially. The institutional 13F filings are due.
Ah, where the big funds have to show what they own.
Exactly. This will reveal if large institutional stakeholders, the hedge funds, the mutual funds, have been strategically accumulating shares through the end of the year. It would really validate the bullish thesis if we see big names building positions.
Okay, those are the scheduled items. But beyond that, the defense drone space, it's always buzzing with speculation, right? That can be a huge driver for a smaller stock.
Oh, absolutely.
What are the high-stakes rumors floating around right now? The things that could cause a massive spike if they turn out true?
Well, The biggest industry chatter definitely revolves around a potential major contract. We're talking multi-million-dollar negotiation, supposedly with a high-profile U.S. defense agency.
Tied specifically to the GPS-denied tech.
That's the rumor. If that lands, it would be the absolute game changer for revenue visibility. It moves the company from being a story stock based on potential to one based on execution and real orders.
Massive validation. And you can't talk about valuable proprietary tech in defense without mentioning
M&A, acquisition chatter.
Yeah.
Absolutely. Rumors are definitely circulating that a larger aerospace player, maybe a prime contractor, might target RCAT for a strategic acquisition.
Why would they?
Well, given their proprietary tech and, critically, that blue UAS clearance, which is so hard and time-consuming to get, RCAT becomes an instant plug-and-play asset.
So a shortcut for a big player wanting to catch up quickly in the tactical drone space.
Precisely. They could buy that capability instead of spending years developing it themselves. It makes RCAT an attractive target.
Okay, interesting. Let's quickly touch on the technical picture before we hit the risks. Stock's around $10.56 now. Where does it sit technically?
Well, the price is currently hovering near a key short-term support level, right around $10. Lose that, and it might test lower.
But the overall trend?
The technical outlook still looks pretty bullish, actually, largely because the 200-day simple moving average, a key long-term indicator, is held much lower. It's down at $8.31.
So quite a cushion below the current price.
Yes, and a strong bullish crossover signal has been maintained since back in Q2. So the longer-term trend is up. Short-term resistance looks like it's around $12.50.
And if it breaks through, $12.50.
Breaching that level would likely confirm the upward trend is resuming, and it brings that median analyst target of $15 firmly into view as the next major milestone.
Okay. We've covered a lot of optimism here. The tech, the potential, the analyst view. But we absolutely have to challenge the investment thesis.
Always.
If this is such a great bet on the future of defense, what could go wrong? What are the key risk factors that could completely derail this growth story?
Okay, risk number one is operational. Execution risk. Simple as that.
Meaning?
Meaning they are innovating really rapidly and they're expanding into the extremely complex defense sector.
That kind of pace, it can seriously strain management resources.
Even with that big capital raise.
Even with the capital raise acting as a buffer. The company has to prove it can actually scale operations, scale manufacturing, scale support services, just as fast as it's scaling its technology ambitions. That's not easy. Makes sense. Big jump from R&D to mass production and deployment. And the financial risk we talked about earlier, that still looms large, right?
Oh, hugely. That brings us back to the profitability challenge. Those sustained operational losses, that negative free cash flow, it means they are still very much in the growth at all costs phase.
Which can't last forever.
Exactly. Investors need to see a clear path, and relatively soon, to positive operating results. Otherwise, that huge $172 million capital raise starts to look less like a comfortable runway and more like, a ticking clock before they need more cash.
Right. And finally, the market itself, it's not like they have this space to themselves.
Not at all. That's the market risk. You can think of RCAT as the agile speedboat, making quick turns with cool tech.
Okay.
But they are maneuvering in an ocean full of aircraft carriers. The Lockheed Martins, the Boeings, the Northrops, the giant defense primes. Competition is intense.
And those big guys have advantages.
Huge advantages. RCAT needs to maintain that technological lead, especially in AI, and that crucial resilience factor. Because if the larger defense primes catch up, or if they develop similar certified tech,
they could just outmuscle RCAT.
They could, with bigger balance sheets, deeper political connections, more power in securing the really massive long-term contracts. RCAT could simply be squeezed out or crushed.
Okay, so execution, profitability, and competition. Those are the big hurdles.
Those are the main ones to watch, absolutely.
So wrapping this up, this stock feels like a classic high-risk, high-reward story. It's really powered by these crucial defense technology wins.
That's a good summary. They are strategically positioned right at that convergence point, defense modernization meeting superior aerial tech. The blue UAS clearance and the GPS-denied capabilities are the proof points.
The core insight here, it seems, is that when you invest in RCAT, you're investing less in their current financials.
Which aren't great yet, right?
And more in their technological alignment with where warfare seems to be heading, especially contested warfare.
Exactly. The key question you as an investor have to answer before jumping in isn't really, can they be profitable this quarter?
No, it's more like,
do I fundamentally believe that this specific proprietary GPS-denied technology will become indispensable standard equipment for the U.S. military over the next, say, 3 to 5 years.
Because if the answer to that question is yes,
Then the current losses look more like the necessary price of entry to capture a massive future market. Keep your eye locked on that November 14 earnings report. That's the next checkpoint for the first real signs of those crucial contract details emerging.